Hello, students. I hope you're all doing well. Welcome to the virtual world of business studies. Good afternoon, dear students. A warm welcome to a new video on sources of business finance. So, in the last video, we discussed about owner's fund, and in the current video, we are going to discuss about borrowed funds. And let us list down the items that come under borrowed funds. Number 1 is debenture. Number 2 is loan from banks. Number 3 is loan from financial institutions. Number 4 is public deposit. Number 5 is lease financing. And on number 7 stands commercial paper. Let's move on to the first item, which is called as debenture. A debenture is a type of debt instrument that is not secured by physical assets or collateral. Debentures are backed only by the general creditworthiness and the reputation of the issuing company. Now, both corporations and governments frequently issue this type of bonds to secure capital. Like other types of bond, debentures are documented. These are long-term funds which are used for expansion and modernization of business. Now, let's move on to the next point. If a company needs funds for expansion and developmental purpose, and they are not willing to increase their share capital, they can borrow from the general public by issuing certificates for a fixed period of time and at a fixed rate of interest. Now, these loan certificates are called as debenture. Debentures are offered to the public for subscription in the same way as we issue equity shares. Debenture is issued under the common seal of the company, acknowledging the receipt of money from the subscribers. Now, I just wanted to show you an example of how debenture looks like. See, when the same debenture is issued by government, it is called as bonds. When it is issued by private institutions, we call them debentures. Now, you will always say, what are the merits of issuing debentures? Children, it is preferred by investors who want fixed income and at a lesser risk. These are fixed charge funds and do not particular in profits of the company. They do not take any share in the profits of company. They get a fixed rate of interest. The issue of debenture is suitable in a situation when the sales and earnings of the company are relatively stable. Moving on to the limitations. The first limitation is, as fixed charge instrument, debentures put a permanent burden on the earnings of a company. Coming down to the second point, in the case of redeemable debentures, the company has to make provision for repayment on the specified date, even during periods of financial difficulties or at times when the business is making losses, which makes little life difficult for a business. Each company has a certain amount of borrowing capacity. Now, let us move on to the next item. And here we are going to talk about commercial banks. You can give the example of SBI, you can give the example of HDFC, you can give the example of Kotak Mahindra. Now, what is a commercial bank? It is a financial institution that provides financial services. And what are these services? They are accepting deposits, issuing loans. Commercial bank customers take advantage of a range of investment products that commercial banks offer, like savings account, like certificate of deposits. The loan of a commercial bank can vary from business loan to auto loans to mortgages. Now, let's move on to the next slide, where we will talk about the advantages or merits of taking loan from commercial banks. Now, commercial banks provide timely assistance to business by providing funds as and when the business needs it. Similarly, Secrecy of a business can be maintained as the information supplied to the bank by the borrowers is kept confidential. Formalities such as issuing of prospectus and underwriting are not required for raising any loan from a bank. Now, this is a great advantage. The other advantage is loan from a bank is a flexible source of finance as the loan according to business needs, and it can be repaid in advance when funds are not needed or when business has excess funds. Now you may say, sir, do we have any limitations? Yes, children. Funds are generally available for short periods and its extension or renewal is very uncertain and difficult. The other drawback is that bankers may go for detailed investigation of the company affairs, their financial structure, and may also ask for security of your assets. Now you'll say, what are security of assets? They may ask you to mortgage your land, your building, your machinery, and sometimes they even ask for personal securities. In some cases, difficult terms and conditions are imposed by banks for granting loan, which makes life a little difficult for small businesses when they go to commercial banks for taking a loan. Now, let's move on to the next item, and here we are going to talk about financial institutions which are very popular, which have a great reputation, and it is a dream and desire of every business to go for loan from financial institutions. Now you would say, sir, what is so special about these financial institutions? Now, it is a company that is engaged in the business of dealings with monetary transactions such as deposits, loans, investments, and currency exchange. Virtually everyone living in a developed economy has an ongoing or at least periodic need for the services of financial institutions. Now, what are the advantages of taking loan from financial institutions? Now, financial institutions provide medium and long-term finance, which are not provided sometimes by commercial banks. Besides providing funds, many of these institutions provide financial, managerial, and technical advice, and also consultancy services to business firms, which are not provided by commercial banks. And if you look at the repayment of loan, this is made in easy installments, so it does not prove to be much of a burden on the business. Let's move on to the next slide, which is also interesting and which talks about limitations of financial institutions. Now they follow a rigid or say very strict criteria for grant of loans. There are too many formalities, making the procedure time consuming and expensive. The other drawback is that there are certain restrictions, such as restrictions on dividend payment, are imposed on the powers of the borrowing company by the financial institution. Sometimes they insist that the company has few directors in their board which belong to these financial institutions, which can monitor the activities of the business, which sometimes businesses dislike. Now we're coming down to another interesting item, and this is called as public deposits. Now you would say, sir, we have heard of fixed deposits. What are these public deposits? So children, public deposits refer to the unsecured deposits invited not by banks but directly by companies from the public. This is mainly done by the companies to finance their working capital needs. Now you would ask, sir, what are these working capital needs? These are day-to-day transactions that a business does. This is the working capital is also called as life and blood of business. Working capital is needed to pay salaries, to pay wages of employees, to pay electricity bill, and other expenses. So a company wishing to invite public deposit makes an advertisement in the leading newspapers. Now, are there any restrictions? There are absolutely no restrictions. Any member of the public can fill up the prescribed form and deposit the money with the company. Now you would say, sir, do they give any acknowledgement? Yes, the company in return issues a deposit receipt, and this receipt is an acknowledgement of debt by the company. The terms and conditions of the deposit are printed very clearly on the back of the receipt. Even the rate of interest on public deposit depends on the period of deposit and also on the reputation of the company. Let's move on to the merits. The procedure of obtaining deposit is quite simple and does not contain any restrictive conditions as are generally there in loan agreements. Public deposits do not usually create any charge on the assets of the company, so the company is 100% safe. The assets can be used as security for raising loan from other sources. Now it said there are so many advantages. Do we have any drawbacks to this? Children, there are drawbacks. Generally, new companies find it very difficult to raise funds through public deposits. The reason is people do not trust new companies. They always look for reliable companies who have very good reputation in the market. And the second point is it is an unreliable source of finance as the public may or may not respond when the company needs money. There is no surety, there is no guarantee that people are going to take these deposits. Collection of public deposits may prove difficult, particularly when the size of deposits required is large. So these are the drawbacks. Let's move on to the next item, which is very interesting, and a lot of us talk about lease financings. Now you go to Dubai, people say we are giving this building on a 99 years lease. We are giving this land on a 99 years lease. We are giving this machinery on lease. Now you'd be wondering, what is lease financing? So lease financing is one of the most important source of medium and long-term financing. Now there are two parties involved in this. The owner of an asset gives another person the right to use that asset against periodical payments. The owner of the asset is known as lessor, and the person who is going to use the asset is called as lessee. So you have to remember these two terms when we talk about lease financing. They are crucial and they are important, and examiners look for technical terms. Now you would argue, sir, are there any merits to lease financing? Why is it so popular source of medium and long-term finance? Children, it enables the lessee to acquire the asset with a lower investment. There are simple documentation and it makes it easier to finance the asset. The most important advantage is that the lease rentals paid by the lessee are deductible for computing taxable profits. Also, it provides finance without diluting the ownership or control of the business. So this is truly a great advantage for a private firm. Now let's move on to the next slide, and here we are talking about limitations. A lease arrangement may impose certain restrictions on the use of an asset, and we need to follow those terms and conditions carefully. The normal business operations may be affected in case the lease is not renewed. The third is really powerful and important limitation. It may result in higher payout obligation just in case the equipment is not found useful, and the lessee opts for premature termination of the lease agreement. So you should never go for premature termination of your lease. Think carefully before you go for lease agreements. Let's move on to the last one, and this is commercial paper. Now, commercial paper is defined as a short-term unsecured money market instrument issued as promissory note, and again this is not issued by banks but by big companies having excellent credit ratings. Now when people think of investing in commercial papers, they scan the companies, they scan the background of the companies, they look at the credit ratings before investing in commercial papers. You know why? Because the instrument is not backed by any collateral. Only large firms like Reliance, like TCS, like Infosys, like Wipro, they can consider commercial papers because there's considerable finance strength, and they are also authorized by SEBI to issue these kind of instruments. Let's move on to the next one, and here we are going to talk about merits. Now, a commercial paper is sold on an unsecured basis and does not contain any restrictive conditions. Anyone can buy commercial papers. It is freely transferable instrument and it has high liquidity. It provides more funds compared to the other sources of finance. A commercial paper provides a continuous source of fund. Companies can park their excess funds in commercial papers, thereby earning some good returns on the same. Now you would say, sir, do we have any limitations of commercial papers? Yes. Only financially sound and highly rated firms can raise money through commercial papers. Less known firms or new firms cannot issue commercial papers. The second limitation is the size of money that can be raised through commercial papers is limited to the excess liquidity available with the supplier of funds at that particular point of time. And also, the last drawback is commercial paper is an impersonal method of financing. So children, with this we end borrowed funds. Thank you once again for listening to me. Catch you in a new video.